there traders, this is Matt Krupski here with your weekly options beat here on January 31st. This week we're looking at February cattle options that come off this Friday, February the 3rd. Just a general reminder on our weekly options beat, we usually look at options that are close to expiration, stuff that's coming off soon. This week we've got the February coming off, like I said, on Friday. And we look at the open interest profile just because a lot of times as you get closer to expiration, you see the market get driven towards large open interest strikes. It has to do with a function of how option makers are hedging their options, because as you get closer to expiration, the deltas, the Greeks on all the options can change very quickly as you get closer to expiration. So we tend to look at open interest. This week looking at the open interest, unfortunately it's really muddled. I rarely see open interest profiles that look this muddled. The reason I say it's muddled is because you have so many things that are in the money and you don't have one strike looking at the graph here that really stands out. Right now, when I put the chart together, we were trading around 116. I think we dipped back below that this afternoon. So we're trading right around 116. Above 116, we've got about 50% of the calls in the money, only 12% of the puts. And looking at the chart here, you can see the 120 line is where most of the open interest is, but there's quite a bit in the 117s, the 115s, the 112s, the 113s, the 110s. So across the board here, there's not one strike that really stands out in terms of saying, yeah, that might be where we're going. It makes it a little trickier, especially with the action we saw last week. When we were trading up above 120, that puts about 74% of the calls in the money. You know, had that been this week, I would have been a lot more confident in calling for a downside move, just because you rarely see that many options expire in the money. Right now, with 50% of the calls in the money, I'd still be inclined to say we're probably going to drive back down to that 113 area, 114 area. About the between 113 and 114, that would put the fewest number, not necessarily the fewest number of calls and puts, but combined, it seems like, that drive the number of calls in the money down to about 36%. It would drive the puts in the money to about 30%. So it's a good balance there of puts in the money, calls in the money. But like I said, with the move we had last week already pulling back, there's still, I think, an outside chances of us slowing off up to that 120 level and pegging all those calls that are right at the 120 line. Again, sorry I don't have a lot of direction on that this week, but I thought we'd take a look at it anyway just because it's such an interesting chart to see this many open interest strikes and this much open interest that's in the money. All being said, you could see some volatility going into Friday. Also, just a reminder, we've got an FOMC meeting for you financial traders out there, and they do list the weekly S&P options. They have a Wednesday option, so it's a really attractive way if you're looking to play the FOMC meeting tomorrow. The results come out about 1 Central Time, and the options then expire at 3 o'clock. So you've got a 2-hour window there where there's not a lot of time to expiration, but it makes it an attractive way to get some exposure in the S&P. So any questions, feel free to give me a buzz, shoot me an email. I'll be happy to answer for you. And just as a reminder, these are my thoughts and not those of ADM Investor Services or Archer Financials. Thanks and have a great day.